In this week's episode of the Stockscores Market Minutes, we're going to talk about timing the trade. What every trader needs to know, whether you are a day trader, a swing trader, or a position trader. Plus, I'll do my analysis of the stock markets, the currency markets, including Bitcoin, and we'll do the day trade of the week on UXIN. And then I'm going to show you something really important to know about the Stockscores market scan around the holidays. That's all coming up. All right, so timing the trade. There are predictable cycles that occur within the trading day, within the month, within the quarter, and even annually. And you need to understand these things so that you can expect what happens when they happen. So first of all, for day traders, when we start the day, recognize that the best opportunities typically come in the first half an hour. And so if you can only day trade for part of the day, then most of your entries should be focused on that first half hour of the day. Now there's also the final hour or so, I call that power hour. And there is usually in the hot stocks a run up into the close, which can be quite profitable. Again, if you're only able to trade part of the day, that's another area where you can take advantage. Now within the month, at the end of the month, there tends to be a slowdown because of margin calls having to be cleared out before month end. And then in the beginning of the month, you tend to get money coming back into the market and it tends to be better. Probably the slowest time is at the end of the quarter. There's not a lot of earnings announcements coming in the final couple of weeks of March, the final couple of weeks of, January, February, March, April, May, June. So the final few weeks of June, the final few weeks of September. And at the end of the year in December, it's not always that way. You just tend to have a general slowdown because of the Christmas holidays. And so those are other things that you need to look out for. At the start of the quarter, which tends to begin the second week of the quarter, so the second week of April coming up here, is when the action starts to pick up again, because that's when the earnings announcements start to flow out and you get lots of alpha, lots of abnormal activity. Now, there's also the summer slowdown, there's the Santa Claus rally, there's seasonality. The market tends to be best from November till May, and then probably the worst in September, first part of October. February tends to be a slower month. So these are all things that you need to understand when you're trading, not because you're going to avoid necessarily, but your expectations can be lowered. I know that in the final part of March, it's going to be slow, and I don't have high expectations. All right, let's get into this week's market analysis and start off with the chart of the S&P 500, as we always do. And this is the 30-day, 60-minute chart. And you can see that the market has been moving up actually fairly nicely the last week. However, volume was fairly light. There wasn't a lot of good action in individual stocks. There's not a lot of alpha. And so although the market has been creeping higher, I would call it drifting higher, it wasn't doing so with a lot of excitement. I expect that will change maybe next week, more probably the following week as action picks up with those earnings announcements coming out. The charts are in good shape though, because we are in upward trends. We do have rising bottoms. You can see the S&P hitting new highs last week. So that's a positive and keeps me in the bullish camp. Now the NASDAQ 100 is lagging the S&P 500, but it has broken that downward trend line from a rising bottom, and that indicates it's likely to move back toward the highs. Looking at the Russell 2000, which is the small cap market, it has broken its little pullback from a very slight rising bottom, or perhaps using that one a double bottom. And again, this points toward the market moving back toward those highs where it will get stuck at resistance. On to the Canadian markets. The Toronto Stock Exchange had a good day on Friday, moving up, but volume very light. Of course, with the holidays, that wasn't Friday, that was Thursday. With the holidays coming, the long weekend, it was sort of a melt up as opposed to any strong buying, but the chart looks reasonably healthy, as does the weekly chart. It's still in an upward trend, hitting new highs. The TSX Venture stocks, those small cap stocks in Canada, they are still just at that downward trend line. They have built the rising bottom. So if we could get a little break to the upside here, that might be good. I did see some strength in the cannabis stocks the last 2 days of the week, and that may be what is behind this little jump up at the end of the week on the TSX Venture, as there's quite a few cannabis names on this market. On to currencies, and the US dollar chart having broken the downward trend line. Remember, this is a basket of currencies against the US dollar. But what's important to see is that we're starting to build some optimism. I think it's going to be a slow recovery, but at least a recovery has begun. On the Bitcoin market, we are stuck in what's called a pennant pattern. You can see there the shape of a pennant. If it can break to the upside, then that indicates higher prices. If it breaks down through the lower boundary, then we may see some profit taking in Bitcoin. And the commodity charts, there is gold. It is still sort of holding at that upward trend line that I've talked about for a number of weeks. Holding nicely so far, but there's really no buyer enthusiasm yet. On the oil chart, it's sort of making a stall after making a big run higher for a number of months. It's stalling. It's still well above the upward trend line. It could pull back a bit and still be healthy, but the volatility is narrowing. You can see the height of that candle last week. It's quite tight, and that means that confidence is returning. Maybe we can launch off of that and break this little pullback to continue the upward trend into this old trading range on the BNO. And finally, the fear chart. Fear is very low, not a lot of concern here. People are not protecting themselves by buying the VIX. So my ratings then, bullish on both time frames for US and Canadian stocks, neutral on both time frames for gold, and oil bullish long-term and neutral short-term. We've got that end of quarter slowdown, and that has meant fewer hot stocks in recent weeks. However, even though the index has managed to make gains, we shouldn't have expected a whole lot from these individual stocks. What's good is that we're going into a new quarter, and that tends to be when there is a pickup of action. It could be as soon as next week in anticipation of earnings, but earnings announcements really don't start rolling out until the second week of the month, so watch for that. Gold is holding the upward trend line nicely, but it hasn't shown any buyer enthusiasm, and oil's taking a little pause in the upward trend. It still looks relatively healthy. Fear is low. All right, let's jump over to the day trade of the week now. And the day trade of the week is an example of a stock that was picked up with our active live algorithm. This algorithm runs on every stock traded in the US market, looking for abnormal price and abnormal volume activity on a very short time frame, the 2-minute time frame. And when we see that, we go look at the chart, we look for stocks surprising the market. Now you can do this on any individual stock, but it's difficult to do on 7,000 stocks, and that's why we have to let the computer do most of the work. Running that algorithm on all the US stock market at once really requires a lot of computing power and some sophisticated and analytical tools, and that's what Active Live is all about. You can learn more about that on the Stockscores website. So let's jump into the day trade of the week. This UXIN made its action candle right there. You can see the volume was starting to pick up. If you had been looking at UXIN on Thursday, you would have said, oh, that looks like there's something happening. The challenge, of course, is to know to look at it, and that's where the action candle comes in. Now, we got a second signal about 8 minutes later, 10 minutes later, when it broke through the action candle close. That's something I teach in Active Live, this idea of a second signal, and that started this stock on a pretty nice run. It went up as much as 11 RR and then pulled back, and then you got another buy signal there on the break of the pullback, which ultimately led to the stock closing the day at about 13 times its risk. So the economics then, for every $100 of risk, you would buy just under 2,000 shares. That's $2,627 of capital. I think that's the wrong number there. I'll have to check those numbers, but it's more or less around that area. It earned 13.2 times risk, which is $1,320 gain on the $2,627 of capital, a 50% return for a one-day hold. All right, now we're going to jump to the market scan, and I want to show something important for Stockscores members trying to do a market scan on a long weekend. Because what happens is the database is expecting data for Friday. And of course, the markets are closed Friday. And so there is no data. So if you run the market scan, you're going to get an error message. So if we go in here and I run the abnormal break scan, which is what I would usually do, let's see what happens. I get this. Oh, didn't work. Let me try this again. It's supposed to give me an error message. Run the market scan. Oh, hold on a second. I think I'm screwing up. Run the market scan, select the scan, abnormal breaks US, run it. There, see how it says no stocks were found matching your search criteria. What you then need to do is turn off this trading stocks only. I had done that before, and I think that's why those old scans were running. Trading stocks only, turn that off, select the scan. Sorry, now turn off trading stocks only. Run the market scan, and now, voila, you get 172 candidates. That's because it does no longer look for whether the stock was trading or not. And then you can start to run your market scan inspection of the charts. We're going to go jump ahead a few pages here just to get out of these 1 cent stocks. And so now you can look at the stocks that were abnormal on Thursday because, of course, on Friday the market was closed. And as always, we just cycle through these looking for those stocks breaking from low volatility. So here you have PICO. You can see the stock making what's called an ascending triangle. Now, when I see something I like on the daily, I jump into the 3-year weekly, and I can see a stock that is making a pretty good pattern, but it is still below that downward trend line. See how it's right at the downward trend line? And also the volume on Thursday wasn't all that high. So although the pattern's pretty good, the lack of volume support doesn't get me too excited about it, and I would only consider that to be a 6 out of 10. But no problem, we just keep moving along, looking for those breaks from low volatility, the patterns that I teach you to look for in either the investor course or the active trader course. You can learn more about those on Stockscores. Now at this point, I'll just want to remind everyone that I do have a number of free webinars coming up. If you go to Trader Training, and then upcoming events, and just cycle down to the bottom of the page, you will see a few, and there's more to be added, but right now there's 3 up there, different webinars that you can participate in later in April. So register online, it's free, they're about an hour long. You're gonna learn lots about my day trading approach, about my longer term investing approach, and just some things that every trader should know in order to succeed in the market. Well, we'll wrap it up there. Hope that you've enjoyed it. I want to wish you all a great long weekend. Have a great week in the market next week, and trade well.